Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. It is up 0.6% for the week, and we hit another new all-time high at 6,300, and we'll round up to $14. So new all-time high on the S&P 500. A bunch of mixed signals here. So we have gradual rising volume with gradual rising price, which would indicate that it's probably going up next week. We have a golden cross right here, which would indicate it's probably going up next week. But then on the other side of the coin, we have negative divergence here on the RSI and the MACD. So while the price is moving up, the RSI and MACD are moving down. So this one's kind of a coin flip in my opinion. If I had to guess, I would say it's probably going down next week, but we shall see. The dollar is up by 0.6% for the week. So I'm going to zoom out long term right here on the dollar. So this is going back to the mid 60s here on the dollar. And we could see it was in a general downtrend from the mid to late 60s all the way until like 2010, 2011. And then we've started this kind of trend up. Now, does this continue? Do we have like a, I don't know, some kind of a trend line basically like that where this continues to go down? I don't think so. I think we're kind of in a new channel up. So we had this pretty good correction here in the dollar. And I think now we're kind of on a general, another spike up. You know, I think over long term, the dollar is probably going to get weaker, but I think we're kind of at a point now where this is the DXY. And so this is compared to other currencies, right? So they're all becoming less valuable because all governments are printing more and more currencies. But I think the US is going to be slightly more valuable than the rest of those currencies, generally speaking, because we have the fortitude or the fortitude. We have the lucky take of being the fortuitous. I think that was the word I was looking for. We're lucky in that we're the reserve currency. So I think generally speaking, this is probably going to kind of work its way up here. We'll see if Brent Johnson's right or not with the dollar milkshake theory. But as far it does seem to be in kind of a parallel channel right here. I mean, if the Fed cuts rates or, you know, Trump gets his way and interest rates go to like 1% or something, then I think all bets are off here. But for in the meantime here, it looks to me like the dollar's probably going to move up and probably will this next week as well. All right, and the 10-year Treasury yield is up 0.1% compared to last week. So it hit up on the 4.5% like we thought it would. And now it's kind of heading down to support. Your first level of support is going to be 4.35 right here. And that's not super scientific. It's just this upward 200-day trend line right here, right? So I could definitely see it coming down to that, and it probably will. As far as resistance to the upside, still going to be that 4.5. And then after that, it's going to be this one right up here, like 4.6. All right, and gold is down 0.2% for the week, so kind of heading sideways here and also following the 50-day moving average. So I think it's more likely than not that we'll continue to go sideways or down next week. Oh, and big announcement, we are now on Spotify on the, we've been on Spotify with the audio version of the show, but now we are on video as well. I know a lot of you guys were asking me about when we're going to do that. Well, the time is here and we are on there now. So if you like to watch on Spotify, you guys can head over there and check it out. We're also on all the other podcast outlets that where you absorb your audio content. Gold divided by the S&P 500 changed. Gold underperformed the S&P by about 0.8% last week. We're at 0.533 right now. I think it's likely that we'll probably, if we don't come down to touch this 200-day moving average, I think this will kind of slowly rise until it catches this right here. But basically, as this goes, we expect this chart to go up as gold outperforms the S&P 500 like it's done many times before. And we'll see if that happens, but my money is on it doing exactly that. And GDX is down 2.4% for the week. So if we zoom in here, this kind of looks like a bull flag. So looking pretty good here for the GDX. So you see we got a pull right here, and then the flag is ironing out like that. So I could definitely see GDX bouncing to the upside. Before it does so, you guys had your limit orders in right there at $50.50, and it hit there on Thursday, got down to $50.44. So you are in. Congratulations. And all that was just coming back here for a triple top, one right there, and third time is a charm. Okay. GDXJ down 3.9% for the week. So said last week, if you want to take a starter position, if you're new to the club here, welcome. Gold is probably where you want to start. This is a junior gold mining index ETF right here. So you could take a starter position right here on the 50-day moving average. It's a rising 50-day moving average. If we look back over the last 6 months or so, we've just had really good odds. Like if all you did was just buy every time it hit the 50-day moving average, you're having a pretty good time, right? So you could just do a starter position there. I like limit orders on this one of $65, $58, and then 51, although I think it's pretty unlikely that 51 will hit. 58 might hit maybe 40% of the time, something like that. All right, and we just got back from the Rural Symposium, and the interviews continue to roll out. So last week we had Jeff Clark, we had Scott Melby of Uranium Energy Corporation and Uranium Royalty Corporation. We had Nomi Prinz, we had Tony Rita of Tectonic Metals, and Tavi Costa and Adrian Day. So an episode a day just keeps coming out. Lots of content, so be sure to check them out. I interviewed them just like Rick taught us. I followed his protocol, so if you want to watch the replays of the Rural Symposium, there's a link down below, or you can go to our website, stevebartonmoney.com, and you'll find all the links there. Next week, coming up, future guest, we have Leonard Wright. Now, he was introduced to me by a family friend. He's a money manager, and he manages money for people in the United States. He's going to have all sorts of tax tips for us. And also one thing we want to get into is using our Roth IRAs to buy real estate. So you can buy real estate through your Roth IRA, and we're going to pick his brain on that. And after him, we have our resident coal expert, Matt Warder, is going to be coming back on the show. So be sure to get your questions in, submit them under the post tab in YouTube, or just follow the links in the newsletter. Barrick Gold is down 2.3% for the week. So finally did it. I am out of Barrick Gold, sold everything. This was actually kind of a tough one to do here because looking at the technicals, it kind of looks to me like it's going up. So you guys could probably already see it right here, but we got what looks to be like it's going to iron out to be a bull flag. I just got a little too nervous here on Mali, and it looks like they're just having nothing but problems there, and I just didn't want to be a part of that. So Barrick and Newmont took up about 4.5% of my portfolio overall, and I wanted I'd rather put that in Equinox or something that I feel a little bit more comfortable with. And on top of that, it's had a nice run. We got in down here. It hasn't performed as well though. Newmont's been performing really well, and that was a tougher sell. So I also sold Newmont. That one is down 3.2% for the week. And same thing here. So you guys will all remember that, right back here, we just backed up the truck on Newmont. We were basically putting it in an order every other day as it went down. And that, now that we can see the future, that turned out to be amazing, because we're up basically at a double from the bottom point there. Newmont, however, it had an amazing run. It was a lot of fun. Okay. We're almost past the point of concern on this one, not quite, but after talking with Rick yesterday, When the CFO, the chief financial officer, resigns days before an earnings call, that's never good. And we'll see what will happen in time. The real story will come out, but they got earnings coming out here next week. And I don't want 2% of my portfolio in a company where the CFO just his taillights day before an earnings call. And so Rick kind of gave us a heads up to that one. And I figure, you know what, I'd rather put this in Equinox, or maybe I'll roll it into Devon or something, or just keep it as cash and give 4% from treasuries. I don't know, but I'm going to wait and see what irons out on this one. Despite what it looks like on the charts, that was a case where fundamentals kind of trumped anything that I saw on the charts. Okay, and Neil says, let's see, what do you do? So thank you for the donation, Neil. I appreciate it. You're a gentleman and a scholar. Says, what do you do with data that covers categories like 1, are insiders selling or buying shares? 2, ownership percentage of the stock held by institutions and insider ownership. 3, hedge fund buying. 4, is sentiment bullish, right? He says, how much weight do you give to each of these components? All righty, Neil. Well, let's say, I would say that probably 75% of my analysis is, at least as far as to buy or sell, is based on technicals, looking at the charts, right? That's probably, 75% of it. 25% is based on fundamentals. So most of them I kind of look as little breadcrumbs, so I wouldn't really know how to put a percentage on that, but there are definitely some hard stops for me on these. And when you go back and you listen to the interviews that I have that I'm doing from this last symposium, you'll see that there's a formula that I follow, right? And I got that formula, I got that protocol from Rick at the last one in New Orleans Investment Conference. I did a video on that, and he basically told me exactly what to do. So we start out. Actually, I got this part from Jordan Royburn, and it kind of gives you an idea, a snapshot of what size the company is. Market cap, cash, and debt. Right after that, hard stop for me. Have you and your team been a success before in an endeavor that resembles the task at hand? Have they, did they just become gold miners, or have they been doing this successfully for 3 decades, and they've done this twice before, and now they're trying it for the 3rd time? Okay, if they haven't done this before, then I'm not interested, right? Okay, who owns your company? Do you own any? Do you have vested partners? Okay, if the CEO doesn't own a meaningful amount of stock, then I'm not interested, because he has no vested interest in the stock performing well, because he doesn't own any of his own company. There's plenty of companies out there where you look at what the CEO's salary is, and you look at how much shares he owns, and you're like, man, in about 2 months, you get paid more than the amount of what the dollar amount is of your shares. Not interested, hard stop, right? Scalability, what are you looking for? What is your target size? I want a big deposit. I want there to be a lot of gold. I want there to be a lot of copper. I want there to be a lot of whatever it is that they're looking for, because that's where you're really going to make your money. You know what I mean? Like, I kind of have like a kindergarten cutoff of about 4 to 5 million ounces of gold, or thinking that it could get to that level. Does that make sense? Okay. Then what is the principal unanswered question today? How do you propose to answer that question? How much time will it take to answer that question? And how much money will it take to answer that question? Some interviews that never make the cut, they can't even answer that, right? They need to be thinking all the time about, how can I make this project more valuable? How can I, what are these drill results going to tell me? Why am I looking over here? If they can't answer what the unanswered question is and how much money it's going to take to get that, then yeah, that's kind of a hard stop for me as well. All right. I hope that helped, Neil. That's basically some of the things I run through. And those are the orders that I do them, and you can literally follow along in real time when I'm going through these interviews, and now you know the formula. All right, and silver is down 1.3% for the week, so this one surprised me a bit. I thought this bull flag would have played out a little bit more to the upside, So you'll remember last week we had a bit of a pull here with a flag pattern right? And we can measure these patterns by using our handy dandy little measuring tool. Down here, you take it from the bottom to the top, and then you just extend it up, and I'll save you the time, and it basically came out to like $41 to $41.50. Didn't happen. It did shoot up on Monday and got to, a 14-year high or whatever it is of $39.50, $39.57, and then came right back down. So where do we see it going from here? A pretty bearish looking bar on Friday there. But when you look at the weekly bar, not so bad. It looks actually kind of bullish to me. So I don't know what I write down here. I wrote the consolidated down story with silver moving up here as the floor moved up too. I'm kind of leaning a little bit more towards the upside than the downside. And I think what's probably a little more important here with whether this moves up a buck or so over the next little while is I think the floor has moved up, right? So the floor in silver before was basically that tick right there, this tick right here. It was pretty much like 26.50 to 27.50, somewhere in that ballpark was the floor before. I think our new floor here is kind of on the like 29 to, I mean, this is a big range, but 29 to 33, okay? And I'll just settle on $30. Like I would be surprised if silver moved down below $30. So maybe we can just call it that. But that's what this little blip up here did, moving up to in the 39s is we essentially moved the floor up. Okay, so pretty exciting for silver. And Makara is excited as well. One of the top comments, ladies and gentlemen, silver is booming. Physical silver on the exchanges is running out very quickly. I don't care about the price of silver in 2025. I care about the price when the COMEX and the LBMA can't fulfill their contracts to deliver physical silver. That would be an interesting day, wouldn't it? When they have no contracts to be able to fill. Okay, how do we bet on silver here? SIL is a popular silver miners ETF. I like buys right here. I got the first limit order set here for $47.50. So you guys that were watching in the last couple of weeks, you had that order hit. Probably going to come back down and hit that one again. Little baby trend line right here. You guys can see that, right? And just move that right up to there. We got 1, 2, 3, 4, 5, 6 points hit right there. So I suppose now wouldn't be terrible, but I'd wait for the $47.50. I think it'll hit. After that, $43 and then $40. And also, this has a lot of wheat and precious metals in it, which is a fantastic company. So I think this is a good place to start. And SILJ is down 7.4% for the week. No, sorry, 5.4% for the week. So same here, basically just hoping that silver gets slammed so that we can rinse and repeat this again. This is an awesome trading vehicle. I mean, like, there was our buy, there was our sell. Now we're waiting for it to wash out again so that we can rinse and repeat. I think I'm going to be, instead of getting into these ETFs and any more Pan American silver, I'm going to be getting into some of these junior silver miners. That a lot of them that were at the World Symposium, so interviews are coming out about that. Be sure to sign up for a free weekly newsletter, and I'll be talking about them and throwing some charts in there on them. So entry points on this, I like $14.50, $13, and $11.75 as a stink bid. And again, the green lines down here, I figure there's probably a 10 to 15% chance that green line gets hit. So unlikely that it'll get hit, but if it does, that would be a smoking deal. And Pan American silver down 7.4% for the week. So retracing a little, came up here to the top of this parallel channel and then broke right back down. So you guys might get a second chance here at Pan American silver. Just gapping up right here. And so we'll see if it is able to come back down. I like if there was a red line that I would draw it at about $25. And then the yellow line is at $22.50 and the stink bid is at $19. And I probably need to raise that green one up to like $20.50. I think would be a lot better. Okay, and supporting the show. So I support you. I'm someone who can help grow your finances, and by finding you the right commodity to bet on or the ETF or company to do it. I love doing this. This is a lot of fun to me. Monday Market Moves is my favorite show of the week. I really enjoy the interviews, but this one is my favorite. So I get a lot of questions like, what's my business model? How can I support the show? Well, first of all, like and subscribe if you haven't already, and share this with anyone that you think needs to hear it. And then you can join me over at the Rule Classroom and the Rule Classroom Plus. I'm on the payroll now, and when you guys join and contribute, that supports me in the show. You can claim your free weekly newsletter, and so the newsletter is free, but there's a lot of affiliate links in there. So if you end up clicking through and end up buying something, then the show gets a little kickback from what you bought. It doesn't cost you any extra, and sometimes you even get a discount. Also, usually about any of the show notes that you see down below, or the pinned comments, or any of the links down there, they're almost all affiliate links. So if you end up purchasing something, we'll get a little kickback. And if you're going to buy precious metals, if you could do me a favor and you could buy it on the website. So right here, if you scroll down, you can see buy gold, silver, platinum, palladium. You can click that, or you can go right up here to precious metals and buy gold, buy silver, buy platinum, whatever it is you want. I think probably the best deal right now. What's the best deal right now? Probably platinum as far as physical. It'll take you right over here to Miles Franklin. I bought from them personally. I would not endorse them if I didn't like them. Yeah, like them a lot. And also right here, this is how you sign up for the newsletter. So got a lot of questions on this. You basically just enter your email right here, and then you click this little button, I want to subscribe to your mailing list. Otherwise, you're not going to get it. It's called a double opt-in formula. And if you don't click that, you're not going to get the newsletter. Right here also is our technical analysis series, your step-by-step guide to getting confident trading. And it'll take you right over here. This website is called Gumroad, and this is where you can watch the videos and download the TA series. So that's how you can support the show. Thank you to everyone who has done so. I really appreciate it. And I love doing this. I'm honored that I get to do it. And I really, really enjoy it. It's a lot of fun. All right, copper. Paging Dr. Copper is exactly flat for the week. Is that right? 0. Yeah, it's flat for the week. Okay. So started and ended right where it was. Okay, now this pattern is kind of interesting. Okay, kind of looks like a bull flag, right? We got the pole going up, but what's a little bit different, see how it kind of comes down like that and then goes like this? So this is called a pennant. But you measure these just like you would a bull flag. You just measure the pole right up here and then extend this up to where the breakout would be, like probably right around there somewhere. And then I will shrink this down. And so that could have a target price right there of $6.50. I don't know. We'll see what happens with all this, what's going on in the Casablanca. But who knows? They're throwing tariffs around like candy. Maybe we will get something out of this. BH says, how clever of the White House genius to make copper more expensive for the U.S. Yes, very cool. And Baza says, there is a 4-year inverse head and shoulders going back to May 21st, completing April 25. Okay, so basically he's saying there's a head and shoulders here. Let me make sure. So here's there we go. Let me zoom this out. There. Okay. All right, so he's saying here's the shoulder, here's the head, and here's the shoulder. Okay, let me draw this. All right, that head and shoulder, and then basically the way you measure these is you take from the head, I guess we'd take from there up to there, and then project this up and up to $7 copper. Okay, yeah, a little north of 7 or so. Now, a couple things with this. I am under the impression that head and shoulder pattern. So this is an inverse head and shoulders, right? It's a reversal pattern. So basically, you want the stock price coming down, then go into the shoulder, head, shoulder, and then reverse and go up, right? Okay. This one, the stock price is going up and then it forms the pattern. So I don't know that this one's valid, and it would be the opposite if it were the other one. If it were a head and shoulders, so it would look kind of like, a shoulder and then a head and then a shoulder, right? And if it's this way would be a reversal pattern to the downside. So you would want the stock price going up, it forms the head and shoulders, and then it goes down. So I don't think that this is a head and shoulder. I mean, there's a lot of TAs in here. You guys put in the comments below whether you see a head and shoulder, an inverse head and shoulder here on copper, and we'll start a discussion group in the comments down below. That's one of the beauties of this channel is we get, there's 15,000 of you and there's one of me. So let me know what you guys think, and let Bazaar know Baza know what you think, and put it down below. All right, and COP.U, exactly flat for the week. So did not go up, did not go down. I said $7 was good, and then I said, now is probably fine. I ended up keeping it at $7, and I'm regretting that decision now because it got down to $7.01 and did not fill, and missed it by a penny. And so basically, I'm just calling this the 14% arbitrage. You buy here at $7 and you sell here at 8, and you just make 14% every time, and you just chase this Charlie Brown shirt pattern and make money in the process. So if you want to play that game too, that's basically how you do it. But apparently, you need to set it for 701 and not $7. So that was cool. COPX is down 2.9% for the week. So we got within 7 cents of our buy line here, which is at $43.50. Got down to $43.57. Didn't quite hit, but I think if you keep that one in, it will. After that, I like $41.75 and then $38.50. COPJ is down 1.4% for the week. So got some new all-time highs right here. Got 3 little bars that just keep hitting higher right there. I don't really see any tradable patterns here. But as far as looking at price action back here, I like limit orders at $23.75, $22, and $19.75. I think I moved those up a little bit. Yeah, just set your limit orders. They'll probably get triggered. And uranium is down 1.4% for the week. So great to see it retracing just a little bit. We got some support right around there, around the $68, $69 level. Wouldn't surprise me to see it go back down to there. And the Sprott Physical Uranium Trust down 2.4% for the week. So we added another 100,000 pounds to the Sprott Physical Uranium Trust. Absolutely fantastic. We're up to 68.2 million pounds unavailable to the utilities, currently trading at a 7.9% discount. Just got a golden cross last week. So when that happened, Monday, Tuesday, got a golden cross. So that's a bullish sign. I think we can probably take this trend line out right here. And as far as entry points, I typically like to wait until we have a discount on that is, north of 12. I was saying last week, if you're new to the sector and you wanted to get some uranium, this was probably the best one to do. I didn't really see any buys on any of the other ones. As a matter of fact, I think it might be time to trim some positions there. But you could kind of start slowly scaling in here. Maybe like 15.8, something like that. I would prefer to wait for it to hit back down here to the to this trend line right here that was pretty long established. Maybe hit down in there, but yeah, looking great on uranium, making piles of money on this thing. So that's fantastic. URNM up 7.7% for the week. So need to start thinking about taking profits. We took a little bit of profits right back there. I have this kind of idiot-proof line right here drawn around $53. I think is a decent time, but certainly wouldn't fault anyone for taking profits now. Okay, remember we're just adding. We're way in the black on this thing, right? And especially the back up the truck moment down here when it got down below $30. I mean, from that low point right down there, and not very much time, you're up almost 70%. Okay, so in like 3 months, you're up 70% from your low point bet. Might be time to trim a little position there. You know what I'm saying? URNJ up 11.7% for the week. So start thinking about taking profits here. We are up above the 200-day moving average. That's fantastic. We're about to get a golden cross. That's fantastic. But remember, when we're buying these things, everyone hated uranium. It's not hated anymore. People are loving it. All right. So remember that. Sentiment is an indicator, Neil. I don't think it's one that you just only pay attention to, but you definitely need to pay attention when rocket ships start showing up on Twitter feed when it comes to the UTwit crowd, the uranium Twitter crowd, and that is happening as we speak. And Uranium Royalty Corporation up 10.6% for the week. So Golden Cross is, I said incoming. Boom, it's there. It happened on Friday. We have a Golden Cross looking good. Could go up a little bit higher. My profit-taking line is going to be up here at $3. I think we'll hit it. We had a good symposium, good interview. Scott Melby did a lot of he's over in Washington right now, politicking. So I think we might have one little last push up here. $3 mark is my profit taking line. And Uranium Energy Corporation, good God, look at that thing. Just a straight shot up 21.9% for the week. So got within 30 cents of my, profit taking zone. So probably should have pulled the trigger on Thursday or Friday and at least got back some of what we put in here. We were past the point of concern on this one, meaning everything we had was free. And then I decided to get more when it got down around $4 on this thing. And I know you guys did too. And look at where we're at now. We're basically a double in about 3 months. That's not supposed to happen. All right. So we need to trim a little here. We should do that next week. Take some profits. At some point, you got to pay yourself. So we had our Q&A last week with Rick Rule. So be sure to watch the replay on that one. The replay is posted in the classroom. And this next week, I'm going to be doing chart analysis. So we will go here to, where is it? Classroom. There we go. So if you go to the Rule Classroom here, and you'll see the feed, and this is where we just post a lot of stuff. That was Jason Jessup from Magna Mining. Got to interview him. That'll be coming out soon. This is the one of Rick and I yesterday. I'm recording this on Friday night. Rick and I yesterday did a Q&A and asked everyone's questions, so you can check that out there. And coming up, I'm going to be doing chart analysis. So if you go down here on the left side and you go to live streams, you can pull this up and then go to calendar, and boom, there it is right there, chart analysis. This will be Thursday, July 24th at 12:30 Pacific time in the afternoon. So you just click on this. You can submit your company questions there. I'll pull them up on the charts, and you guys can watch live. It'll be on for an hour or so, and would love to see you there. It's a lot of fun. I get a lot of questions here all the time, like, Steve, can you pull up Banyan? Steve, can you pull up Gold? And I just get way too many company questions. There's no way I could possibly pull them up. It takes me about 6 to 8 hours to prep for each one of these Monday market moves. And, if I'm doing all these companies, it's going to take me days to do it. I just don't have time. But if you come here and we do chart analysis, we can do it on the fly. Tell me what your company is. I'll pull it up and we'll all look at it, and everyone can pontificate, and it'll be butterflies and ice cream. So I'd love to see you there. Link is going to be down below, or simply go to stevebartonmoney.com right here. And then you can scroll down here and you go to the Rule Classroom, free, Rule Classroom Plus. All the links are right here on the website so that you can find it very easily. Also, Adrian Day has got one that is coming up on Wednesday. He'll be in the Rule Classroom Plus. I love his presentations. He's probably my second favorite one right after Rick. So would love to see you there this week. All righty, and crude oil is down 3.5% for the week. So still forming up that WTI bear flag. Let me draw it for you guys here. So you got the pole. There we go. All right, so measure downside target. We can just do the same thing that we always do. We do that, and we use our little target tool and down there. And now this gets kind of crazy. I mean, it's showing it down at 51. I don't think it'll do that, but it is a definitely bearish looking chart. So I'd be more inclined that I see the downside probably towards the bottom part of this trend line down there somewhere, maybe around, I don't know, 50, 57, 55, somewhere in that ballpark. Maybe hit like a little triple bottom down here on this, but I definitely think that oil is going down. All right, and XLE, this is your favorite oil ETF, kind of a one-stop shop for oil. I know a lot of you guys in your accounts, your 401ks through work, they only allow you to buy ETFs if you're going to get one in oil. I like this one the best because its biggest position is Exxon, the best oil company on the planet, and its second biggest position is Chevron, the second best oil company on the planet, right? So that's almost half the portfolio right there. I like this one a lot. Okay, now as far as entry points on right here, this seems to be a fairly decent trend line. If it got down to that, which I got the first red line at 84.50, that would be pretty good. If that bear flag plays out in WTI, I think a lot of these are going to get blown through, and you might even get several of them hit within days of each other. So I like 84.50, 81.50, and 79.25. Seems to be some pretty good back support. All right, and ExxonMobil is down 6.6% for the week. So look at that beautiful sell-off on Friday. Looking fantastic. Hit right there. So your limit order for 108 that you guys have had finally hit on Friday, and it looks like it's probably going lower. I mean, we do have a really nice double bottom here. Before I speak, let me look at the 30-minute. Okay, so look, so each one of these bars now is 30-minute. So let me get rid of this red bar here so you guys can see that. And what is the lowest price point right here? We could just follow it right up there. Okay, so I hover over this, 107.15, and let's see what this one is, 107.35, or I'm sorry, 107.33. Okay, so very close to each other. Very interesting. Very low MACD, very low RSI. Just in the toilet there, but not yet quite on the daily. Yeah, so all right, you got in for 108. Next limit order in here at 103.25 and 100. But this is a deal now, and I think it'll get cheaper. Okay? All right, natural gas is up 7.6% for the week. We've got a trend line going up. This is semi-reliable. I mean, you got 3 points here, which is the minimum that you need. So I think that could be a decent trend line right there. More support, I would say, would be around this 200-day moving average, and it's right around the 20 and the 50. So they're all kind of like collecting right around in this zone right here, which gives it quite a bit of support. If I had to guess, my guess would lean more towards it going up next week than down. Devon Energy, fantastic limit order hit. This company is absolutely S-ing cash, and I have no idea why nobody cares. I really don't. But it's cheap now. I think it'll get cheaper. At least the charts are telling me that it'll get cheaper. Until we can bust through this yellow line right here, this 200-day moving average, like this thing's just going sideways or down. That was like a John Madden quote right there, just like Captain Obvious. What they need to do is they need to score a touchdown or they're not going to win this game. Okay, so right here, I think, I think it's going to get down. I think your 32 will hit again. So if you're new to the show and you want natural gas and you want the best natural gas company in the United States, this one is it. Devon, 32, $30.50, and then $27.50 are your limit orders. It pays a decent dividend too. And so do these. Birchcliff Energy. Now we're getting into Canada. Up 1.2% for the week. I moved these limit order lines up because I think the other ones were just in the pipe dream mode. I like this one right here at $4.70, and then $4.40, and then a stink bid down here at $4, which probably will not hit. Pado Exploration and Development is up 0.8% for the week. Also move these red lines up. So this one right here at $13.60, then $13, and then $12. Don't really see any patterns here that might be tradable. A bit of a bear flag pattern. A bit, I say a bit. Not very pretty. I don't think this is a 70% outcome or anything like that. I think we're leaning like 55-45 to the downside, right? But it it's loosely following it there. Seems to be obeying this 50-day moving average, but I like these limit orders quite a bit right down there. And on this one too, if your brokerage account is not investing these dividends for you automatically, then I think you could basically add up how many dividends you've not been reinvesting, and you could place that limit order right there at the 1360. Okay? All right, and coal, thermal coal, down 3.8% for the week. Still trading at the lower end of the range here. Everyone seems to hate coal. And met coal down 1.3% for the week. Still at the lower end of the range here. Looks like it's trying to grind out a bottom. Everyone still seems to hate coal. And our favorite coal ETF is up 0.9% for the week. So hit the 200-day moving average right here. That yellow line got rejected and went back down. And yeah, I mean, it's basically got to break through that. Just insert the John Madden speech. But I think it is more likely to go down next week than up. And I like these limit orders a lot. We got 1775, 1670, and then a stink bid at, what is that, $15. So we're having Matt Warder, our resident coal expert, on the show next week. So make sure you get your questions in for him, and just go to the YouTube post and you'll see his post there. All right. And platinum down. Oops, what'd I do? There we go. Oh, spacebar advances, huh? Learn something new every day. Oh, look at that. Okay. There you go, guys. On my trading view people, you hit the spacebar and it just jumps down to the next one on your watch list. Learn something new every day. All right, platinum is down 0.9% for the week. So we finally had a down week, but still a very bullish looking chart. If I look at the weekly bar, okay, so the way you read these, see how this side of the bar right here, this is last week's, July 7th, and then this is this week's, July 14th, right? The right side of the bar is the close, and the left side of this bar is the open, and the right side is the close. So we're lower than we were last week. Maybe if I put this on candles, it'll be easier to see, right? We're lower than we were last week, but it's still a pretty bullish looking bar here, right? That's kind of a bearish looking bar, but it didn't matter. It went up. See how both of these are basically above, kind of on the top side of that. That means that it's more likely that platinum will go up next week than down. Now this would be a very bearish looking bar. That's only Friday's bar. So that would make you think that it's going to go down. But I think the weekly one, the longer time frame one, will trump the shorter time frame one. All right, and Palladium is up 1.5% for the week. So kind of same story here. Pretty bearish looking bar there on, what do they call that? Not a shooting star. I can't remember. I just call it a reversal bar. But reversal to the downside, kind of a bearish looking bar. And so that would make you think it's going down on Friday. But if you look at the weekly one, still looking pretty strong, looking like it's going to be moving up again next week. Platinum and palladium are absolutely killing it. And the way to play both of these metals is SPPP. And as far as I don't like to chase green candles like this at all, but limit orders, we could very easily have a retracement back down. Zoom out here on a longer time frame. We are hitting quite a bit of resistance where we are now on SPPP. So it wouldn't surprise me at all if it came back down here to 11.25 and then next limit order 10.50 and then $9.50. Although I think this 9.50 is probably done. I don't think that's going to happen. And this is our basic platinum divided by gold, and we can zoom out here and see how historically low we are, right? 1 ounce of platinum will only buy you 0.43 ounces of gold. Fully expect that to reverse here up to the upside, maybe even getting up as high as 2-to-1, trading 1 platinum coin for 2 gold coins, which I would love to do. And this is also platinum divided by silver, still historically cheap, right? So we've had moments here back at the turn of the century where it took 150 ounces of silver to get 1 ounce of platinum, and we had it all the way down here at basically a kilo. It even got under 30, ounces of silver for 1 ounce of platinum. So we are in the early stages of this. I think we have a long way to go, and I think we're going to make a pile of money from those bets that we placed a year and a half ago. All right, and the Bloomberg Commodity Index is up 1.2% for the week. I got some questions. Robert and a whole bunch of people asked, going back to platinum here, asked about Bravo Mining. I tried to do an interview with them out at the Rural Symposium. We even scheduled one. No one showed up. I don't know. I couldn't get an interview. And so I was really excited about them. I thought, man, we need to find some platinum companies here so we can really leverage this instead of just betting on the metal. But I couldn't secure an interview. So I don't know why. Maybe they got busy or something. But couldn't do it. Okay. And the Bloomberg up 1.2% for the week. So like buys kind of towards this trend line right here. I like the Liberation Day buys a lot more in hindsight. I think once we break up about like above, I don't know, we'll call it 107 here, then we're gonna have a really good re-rating on this one. And NIKL nickel futures still sticking around that $15,000 mark. So it looks to me like this is putting in a bottoming pattern, kind of like coal. And I think now is a decent time to accumulate nickel miners. Here's one right here, NIKL. This is the Nickel Miners ETF. We have a golden cross here, but higher price and lower RSI. So negative divergence. I think it's more likely, maybe not necessarily next week, but I think it's more likely in the coming weeks that this is going to get cheaper. And here are your limit order levels right there, $11, $9.50, and $7.50 for your stink bid. And the PIC ETF is down 1% for the week. So finally broke through the 200-day moving average. We're settling above it, right? And just about to get a golden cross in this one, which is pretty exciting. A lot of golden crosses this week and last. But I think it's probably going to correct down. We might have a little baby like bull flag here. See how we kind of got it going up. The one thing I don't really care for about that is it's kind of stair-stepped up. I would prefer to see a couple of candles or bars just going straight up like that instead of it kind of hesitating along the way there. But still interesting with the golden cross. Although volume's going down, price is flat to up, that would say that it's going down 50-50 on this one. But yeah, I like these levels, 37.50, 35, and 33. And Bitcoin, as of this moment, is down 0.9% for the week. So kind of same as last week with a new all-time high, right? So we got a new all-time high here in Bitcoin, 123,000, right? So just spiked up there intraday and then came back down. So you'll remember we drew this Fibonacci extension. So we took the last low, high, back down to the low, and then we could see that it's kind of obeying these levels right here. So you got the 38.2, some price action there, a lot of price action around the 50% retracement, and then even more around the 618, my favorite level. And see, now we're just kind of grinding sideways here on the 78.6, not a coincidence. So the next level that I see to the upside is going to be around 131,000. So wouldn't surprise me if it went up there. Also wouldn't surprise me if we went back down to the 618 level, which is going to be around 109. Now, as far as which way is it going to go next week? Let me pull up the RSI. I'm going to say down. We got some pretty high RSI here, pretty high MACD. Looks like they're starting to roll over. My money would be on Bitcoin going down next week. And the irony is the show will air about a day and a half from now, so you guys will probably know the answer when it airs. Alrighty, well, I hope you guys got something out of that. Thank you guys for being here. I love your support. I love you guys. I love doing this. This is a lot of fun. Thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.